Hi, this is Dan Collins coming to you live from the Las Vegas Traders Expo. I'm joined with Toni Hansen from ToniHansen.com and market. Give me the name.
I have been here a while.
We've both been here for a while. Toni's going to talk about futures. I've written for Futures Magazine. I've worked on the futures trading floor. What I love about futures is there's no bias. You're looking at, if you're a momentum trader, you're looking at moves. You're looking at the market going up, market going down. It's not good to go up or bad to go down. And it gives you a true picture of, I think, of opportunity. There's no bias in it. How does that help you in mentoring traders and defining trends?
I mean, like you said, it's a great market environment for all different sorts of traders, because you're not trying to understand like seasonality of grain or, you know, foreign impacts on oil and things like that can create a lot of crazy swings in some of these other types of futures contracts. You're basically getting a feel for what's happening in the underlying environment of our country, and, you know, people's confidence in different companies is often portrayed in how they are trading the market. And I think it's just a market that people can relate more to than something like hogs or crude oil or things like that. And there's so many different strategies that work well in trading futures. I mean, you can be a day trader, swing trader, as long as you understand basic strategies. I mean, a lot of people ask, okay, well, what is your favorite futures contract to trade? You know, you've got the YM, the NQ, the ES, the Russell. Which one is a good starting point? I generally like to say the Dow or the Nasdaq, because you can get some better movement compared to what your stop levels are going to be. You can get your return compared to what your risk level is going to be a little bit better. S&P 500 can chop around a little bit more, and then when it moves, it can move fast on you. So it tends to be a little bit more difficult for especially newer traders to dive into.
Some people say there's more risk in futures, and obviously that's the risk is how you define it, with how much leverage you choose to use, but it's not any more risky than any other product.
If you go into like Forex, for example, I mean, you can risk like $10 on a trade, you know, trading like certain markets, and you're going into futures, you're risking like a couple $100. So there's that difference, you know. Is it really something for the beginners? I mean, it's like you're becoming a doctor, you need to go into a residency program. Residency programs are not going to be cheap, but you can do a lot of learning before you go live so that you can prepare yourself ahead of trading live.
Yes, especially if you're a surgeon. That's what a lot of people don't do, is they'll open their account, they'll fund it $10,000 and not really still know what they're doing. And so they basically go into open heart surgery the first day. My favorite story on risk and leverage in futures contract is I interviewed somebody who was managing money in the S&P 500. When the E-mini became very popular and people who traded equities said, I could trade this because it became not known but popular, something I could need to trade. I asked him if he'd apply his strategy to regular commodities like corn or soybeans, and he said, I'd never trade anything as risky as corn or soybeans, and he was trading the S&P 500.
Okay, so I remember that swing going into futures, and I thought that our lovely legislators made a big mistake when they basically forced everybody to have, you know, your $50,000 for your pattern day trader rule for stocks, because if you were a newer trader, you could trade like the Qs, you could even trade 50 shares and just learn how to trade, how the overall market moves, and you're basically paying commissions. You can't do that in futures. And so you saw a lot of people even making like tax decisions to switch over to trading futures because there were a lot of incentives for trading futures versus stocks from tax perspective. And I think that created a lot of problems for a lot of traders. And we're starting to see workarounds for things, people being able to pool money to get into trading stocks. And, there's a lot of ways around the pattern day trader rule now that you didn't have 10 years ago, but it's definitely different.
I think the important thing is you control the leverage, and you should not use any more than you feel comfortable with.
Yeah, because different brokers.
And your drawdown will be worse than what you think it is. So work that into your plan.
Yes, yeah. Like you can go into stocks and say, oh, I'm going to accept a 20% drawdown as like my learning curve. You go into futures and that's like one trade.
That's right. And you're not guaranteed the price on the stop. That's going to
yeah. Yes.
So unfortunately, we have no time left.
We could talk all day.
We could talk all day. We're coming to you live from the Las Vegas Traders Expo. Thanks for joining us.